That was funny. When is all my stuff gonna get graded, dude? When? What are my grades? This one, and this one. Yep, I waited to do all my auditing stuff 2 hours before I have to leave for class. Yay! Okay. So, firstly, we have to read chapter 4 of this thingy. So I'm just going to read it. Hopefully it's not that long. It's going to really suck if this is long. Gosh dang it! Please, 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 please. Also, I can't just read the reading itself. I have to also read some supplementary documents because I had that trouble with that last class where there were some supplementary documents for chapter 3 that I skipped over, but I was should have read it. Okay, it looks like this is going to be nice and short because the whole thing is 13 pages. That means the actual reading part is not going to be as long. So, there's reading here. Is there any other stuff we have to read? There's an organizational chart. Maybe I'll have to look at that. Symbols used by previous auditors. And then the revenue recognition function had been described in narrative form. Gosh dang it, there's so many exhibits. Dash it. Okay, so we're on page 32. So, I don't know, 32. Holy crap, that's so short. What the heck? That's like nothing. That's 2 pages. And then, I guess, just whatever stuff is down here. Like, if there's any documents down here with the exhibits. So, like, exhibit, the organizational chart, the flowchart symbols, and then this revenue recognition system or something like that. So that's going to be some more reading I have to do at the bottom. But it's still going to be relatively short. So I don't know. Okay, we can do this pretty quickly. Assessing control risk. So, yeah, I thought I wouldn't be able to complete all the stuff I had to do today because I had to prepare for and then have an appointment with an advisor about an internship. So I spent like 30 minutes doing some research on the internship stuff. And it turns out I probably didn't even need to do any of that research because the advisor basically kind of just told me all the information I needed that I had already read myself. But yeah, I'm still glad. Like the reason for the appointment was it forced me to actually do the research before the appointment. But now I know I have a decent chance, I think, of getting an internship for this summer. That's fine. But if I somehow managed to not get an internship, that would actually be kind of nice. Although it would suck because I'd probably just be forced to get some other part-time job. Because what else am I supposed to do over the summer? Especially considering I have no money. Like, it would just be stupid for me to sit there and do nothing the whole summer with no money. But anyways. So, the CPA firm of Abernethy and Chapman was hired during the summer of 2012 to audit the financial statements of the Lakeside Company for the year ending December 31st, 2012. Even though the year end was nearly 6 months away, the firm began its preparation almost immediately. Wallace Andrews, a manager, and Art Heyman, a staff accountant, both with Abernethy and Chapman, spent a number of days doing preliminary analyses at Lakeside's headquarters. During this time, they also visited King & Company to review the audit documentation created during previous audits. It's funny how they're going there in person when they could just get email. I don't know. Electronic, whatever. They review the audit documentation created during previous audits. And Andrews and Heyman were looking for information that would assist in the assessments of both inherent risk and control risk. In looking at the predecessor auditor's documentation, Heyman was assigned to study the permanent file to learn more about the various accounting systems and internal control features that were in place at the Lakeside Company. While examining these documents, Heyman discovered an organization chart that King & Company had drawn to represent the client's internal control. See Exhibit 4.1. He also found the symbols used by the previous auditors in flowcharting the company's various systems. The Heyman next came to a section of the permanent files entitled Revenue and Cash Receipts Cycle. Revenue and Cash Receipts Cycle Distributorship. Apparently, 2 people performed this portion of the audit work originally. The revenue recognition function had been described in narrative form, whereas the cash receipts section of the company was captured in flowchart form. Heyman analyzed both of these systems in detail to familiarize himself with the organization and operations of the Lakeside Company. After finishing the initial investigation of Lakeside, Andrews and Heyman held a discussion with Dan Klein, the audit partner who had been placed in charge of the actual engagement. This group met to discuss their understanding of the client's internal control, a procedure necessary for audit planning purposes. They wanted to make a preliminary assessment of control risk, which is the auditor's expectation that a material misstatement would not be prevented or detected on a timely basis by Lakeside's internal control. The auditor's evaluation of control risk has a significant impact on the nature, timing, and extent of substantive auditing procedures. Thus, this assessment is made early in the examination. For example, if the auditors assume the maximum control risk, then the auditors will likely perform more extensive substantive tests using more experienced personnel. Conversely, if the control risk is judged to be below the maximum level, the auditor may reduce the overall audit time and effort. However, to justify a lower assessment of control risk, additional tests of controls are necessary. After identifying specific client policies and procedures that could prevent material misstatements, the auditors have to verify both the design of these controls and their effectiveness. As part of the preliminary assessment of control risk, the auditor must come to an understanding of the 5 components of internal control. To focus attention on the 5 areas, Klein posed several questions to Andrews and Heyman. Has Lakeside established a proper environment for strong internal control? Is management aware of the importance of internal control? Does management work to ensure that internal control is constantly functioning in an appropriate fashion? Does the company have a risk assessment policy that identifies and analyzes relevant risks to achievement of its objectives? Does it have a policy for determining how these risks should be managed? Has the company established control activities, policies, and procedures such as the use of adequate documents? Do transactions have to be authorized? Are duties properly segregated to prevent irregularities? Are the company's information and communication systems appropriately designed in order to allow for the proper identification, capture, and exchange of information in a form and time frame that enable people to carry out their responsibilities? Does the company have a process that monitors the quality of internal control performance over time? And that was it. And then, dang, this was short. Holy crap, this was short. So let's see. We have our organization chart here. Come on, are you serious? You I don't understand. How does this bar go away? Oh. How do you get that to go away? Okay, what is this? What is this? What? The Lakeside Company organization chart. So we have the president, assistant to the president. Then we have vice president, sales, treasurer, controller, Vice President Inventory, and all that crap. Okay, that's fine. And then standard flowchart symbols here. I've seen this in a previous class. So, and then we have, here's a narrative description of the revenue and cash receipts cycle. So, all distributor sales are made by telephone. Either the customer or a Lakeside representative calls in each order. The sales division. This sounds a lot like The Office. That was fun. So, the sales division immediately records the incoming data on a pre-numbered invoice, which serves initially as a sales order form. This document is prepared in 5 copies, with the last 3 being retained by the sales division in a temporary file by invoice number. The first copy is sent to Stan Whitson in the inventory department, who verifies the availability of the purchased items. If the merchandise is in the warehouse, it can be sent out almost immediately. However, if any items must be ordered from Cyprus, the waiting time may be as long as 3 weeks. Wisden estimates the ship out date, completes and initials the sales invoice, and returns it to the sales division. The second copy of the sales invoice goes to George Miller, assistant to the president. Miller maintains the accounts receivable subsidiary ledger. He also keeps a list of approved customers with maximum credit limits. However, acceptance of new customers and changes in available credit are decisions made solely by the president, Mr. Rogers, the president. Before approving any sale, Miller checks the current age. So wait a minute. This is the revenue recognition distributorship. Before approving any sale, Miller checks the current age of the customer's accounts receivable balance. If the store is on the approved list, is under the credit limitation, has no overdue balances, Miller initials the sales invoice and returns it to the sales division. If for any reason Miller cannot approve the sale, the invoice is forwarded to Rogers, who reviews all pertinent information. He then makes a final decision as to whether to accept or reject the order. Rogers indicates his decision on the invoice and forwards it to the sales division. If the order is rejected, the customer is contacted and all copies of the sales invoice are attached and placed in a permanent file by invoice number. For approved orders, the sales division matches all 5 copies of the sales invoice. The approximate shipping date is indicated on the 5th copy and mailed to the customer as a confirmation. And mailed to the customer as a confirmation. The first copy is initialed by C.A. Land in the sales division and returned to Wisden in the inventory department as approval for making the shipment. The other 3 copies of the sales invoice are stamped approved and remain in the sales division in a temporary file. Why do they have 3 extra copies, dude? 3 extra copies? What do you do with those 3 extra copies? Upon receiving the approved sales invoice, the approved sales invoice packs, which the inventory department packs and ships the merchandise, and Wisden prepares a 5 copy bill of lading. 1 copy is included with the shipment, while the second copy is mailed to the customer. The third copy is routed to the controller's office. The fourth copy of the bill of lading goes to the sales division, with the final copy being retained by the inventory department. It is stapled to the first copy. Maybe that's why they need 5 copies of the sales invoice. That's probably why, because they have to have 5 copies of the bill of lading, so they may as well have 5 copies of the sales invoice in the reconciliation. Okay, it is stapled to the first copy of the sales invoice and placed in a permanent file by a bill of lading number. When the third copy of the bill of lading is received by Ms. Luck in the controller's office, the quantity of inventory, its description, the bill of lading number, and the date of shipment are recorded in an inventory sales journal. Having entered the appropriate information, Luck places the bill of lading in a temporary file by sales invoice number, which has been manually recorded on the document. Lakeside uses the services of an outside computer center to maintain a perpetual inventory record. At the end of each week, Luck forwards information on all sales and purchases to the center, which then processes the data and returns updated records to the company. When the fourth copy of the bill of lading is received in the sales division, Land matches. Land is a person. That's their name. Good job. Land matches it with the 3 approved copies. Dude, again, like what? Why do you have 3? Why do you need to match it with 3? Why don't you just use one of the 3? Does he just use one of the 3? So, compares the quantity and description of the order with the items that were shipped. If they agree, he prices each sale from an updated price list that is maintained by the sales division. The sales invoices are then extended, footed. What does that even mean? And the due date is added. The fourth copy of the bill of lading is attached to the second copy of the sales invoice and filed in a temporary file by due date. The third copy of the approved sales invoice is sent to Miller. Assistant to the president, while the fourth copy goes to the controller's office. Miller uses his copy to update the accounts receivable subsidiary ledger and then files the sales invoice in a permanent file by customer name. The controller's office matches the sales invoice to the bill of lading, verifies the pricing against an updated price list, and mathematically checks the extensions and footings. The sales invoice is then recorded in the sales journal. Sales invoice is then recorded. Gosh dang it. The sales invoice is then recorded in the sales journal as a debit to accounts receivable and a credit to sales. Sales figures are also classified by geographic district so that commissions can be appropriately accrued. Lakeside representatives receive a percentage of every sale made within a specified territory. After the sale is recorded, the bill of lading is placed in a permanent file by customer name. The controller then mails. Sales invoice to inform the customer of the amount payable, the due date, and the discount terms. According to the invoice, payments should be made by check, payable to Lakeside Company. The customer is also asked to return the bottom portion of the sales invoice, which indicates the customer's name, sales invoice number, the gross amount payable, the discount terms, and the due date. And that was fine. Okay. And then we have this another whole system of that I have to look through, but except instead of narrative form, it's a chart, giant chart that has black bars on the top and bottom that is in the way. Like, seriously, what? Okay, well, so there's so much stuff I can barely even see it. It's so small, man. I don't want to read all this. I don't want to read this. Look at all this. This is the revenue and cash disbursements cycle. This one was the revenue recognition distributorship, and this one is revenue and cash disbursements cycle, distributorship cash receipts. Jeez, there's so much. Oh my gosh. A, B, C, D, E. There's notes. There's literally notes throughout this whole thing. Yeah, I'm not reading all this stuff. Okay, so anyways, we're done. Now we have to study for our quiz. So our quiz is going to be for... Now, it was all these readings here, but I'm not even going to read this or this. So, because he's literally never given us a quiz question for that stuff. So, downloads. Really? It was already loaded. Where is it? Did I never download it? I thought I did. I never downloaded this week's readings. Funny. So... I thought I did, though. I'm sure I did. What? Guess not. And the notes that... Okay, and one of the sections... I don't think he even talked about 620. Did he ever talk about 620? Wait a minute. Did he ever talk about 620? I never downloaded our readings. I'm downloading our readings for this week 2 hours before I have to leave for the class that I have to take the quiz over for these readings. So I don't know. Let's see how many pages I have to read. If it's not very many, I'll just read the whole thing once, and then I'll try to study the specific stuff. If it's a lot, then I will actually just... So, I mean, this is 65, but, like, how much of this do I have to actually read? Oh, crap. That's so much. That is so much. Oh, my gosh. Oh, dude, I don't think I've ever had to read 50 paragraphs of this. This is the longest one by far. Like, the longest one I've had up to this point is like 8 pages. This is 14 pages! Are you kidding me? What? No, this keeps going. 15. I thought it stopped there. No way. This goes for 17 pages. I can't read 17. I mean, I can, but... My goodness. Are you kidding me? What is all this? And he even gave us additional readings, too. And then this. This is 4 pages. 15 paragraphs. I mean, that's already a lot. Man, using the work of an art specialist. Dude, we never even talked about that in our class. We literally never went over 620. I'm sure we didn't. Did we? Like, maybe he did, but we just, I don't know. He wanted us to read extra stuff, too. What are group audits? Responsibilities of the group engagement team. Materiality, page 15 through 17. Like, look at all this other reading I have to do, too. I don't know if this is even going to be on the quiz. Maybe I'll at least look at the formula for component materiality. Like, this is 17 pages. So the total amount of reading for this week is actually, like, 4 plus 18, is it? 17. So 17. So 21, which is actually the same amount as, like, other previous weeks. 20 pages. What did I say for this? I mean, I could try to skip everything after paragraph 10 because when he was in class, he visibly scrolled down to paragraph 10 and then stopped talking or stopped talking about that topic. So like, these aren't even the requirements. Why did he only talk about the introductory stuff? He didn't even talk about the actual requirements. Or at least he visibly on screen only just showed the introductory stuff. The lowest score I've gotten on one of these quizzes so far is a 23 out of 30, right? 76%. I'm doing just fine. That was funny. Stop, 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 stop. Yeah, but there's so much stuff here. I can't memorize all this stuff. Gotta be kidding me. What? Where was a formula? I saw a formula somewhere. Wait. Where is it? What if I just did this? I thought we already read this. That was funny. I thought we already read specialist stuff. Oh, stuff. Wow. Fun. It is currently recording.
Okay, I will text him.
the objectives of the auditor are to determine whether to act as the auditor of the group financial statement. And if so, to determine whether to make reference to the audit of a component auditor in the auditor's report on the group financial statements, communicate clearly with component auditors, and obtain sufficient appropriate audit evidence regarding the financial information of the components and the consolidation process to express an opinion about whether the group financial statements are prepared in all material respects in accordance with the applicable financial reporting framework. Component: an entity or business activity for which group or component management prepares financial information that is required by the applicable financial reporting framework to be included in the group financial statements. Component auditor: an auditor who performs work on the financial information of a component that will be used as audit evidence for the group audit. A component auditor may be part of the group engagement partners firm, a network firm of the group engagement partners firm, or another firm. Component management: management responsible for preparing the financial information of a component. Component materiality: the materiality for a component determined by the group engagement team for the purposes of the group audit. Group: all the components whose financial information is included in the group financial statements. A group always has more than one component. Group audit: the audit of group financial statements. Group audit opinion: the audit opinion on the group financial statements. Group engagement partner: a partner or other person in the firm who is responsible for the group audit engagement and its performance, and for the auditor's report on the group financial statements that is issued on behalf of the firm when joint auditors conduct the group audit. The joint engagement partners and their engagement teams collectively constitute the group engagement partner and the group engagement team. This section does not, however, address the relationship between joint auditors or the work that one joint auditor performs in relation to the work of the other joint auditor. Group engagement team. Partners, including the group engagement partner and staff who establish the overall group audit strategy, communicate with component auditors, perform work on the consolidation process, and evaluate the conclusions drawn from the audit evidence as opinion on the group financial statements. Group financial statements. Financial statements that include the financial information of more than one component. The term group financial statements also refers to combined financial statements aggregating the financial information prepared by components that are under common control. Group management. Management responsible for the preparation and fair presentation of the group financial statements. Group-wide controls. Controls designed, implemented, and maintained by group management over group financial reporting. Significant component. A component identified by the group engagement team that is of individual financial significance to the group, or that due to its specific nature or circumstances is likely to include significant risks of material misstatement of the group financial statements. Reference to the applicable financial reporting framework means the financial reporting framework that applies to the group financial statements. Reference to the consolidation process includes the following: the recognition, measurement, presentation, and disclosure of the financial information of the components in the group financial statements by way of inclusion, consolidation, or proportionate consolidation, or the equity or cost methods of accounting, the aggregation in combined financial statements of the financial information of components that are under common control requirements. Dude, we just got to the requirements just now. How? Responsibility. Why do I keep checking for a grade? I'm not gonna get a grade for anything. Is it bad that this just got showed? I don't think so. The Zoom meeting is not even. The Zoom meeting is closed now, anyways. So nothing here is bad to show. So, in accordance with Section 220, the group engagement partner is responsible for the direction, supervision, and performance of the group audit engagement in compliance with professional standards, applicable regulatory and legal requirements, and finance policies and procedures, and determining whether the auditor's report that is issued is appropriate in circumstances, acceptance, and continuous. Do I have time to read through this whole thing? A group engagement partner should determine whether sufficient appropriate audit evidence can be reasonably expected to be obtained. Like, he didn't even cover any of the requirements anyways in class. He only covered 1 through 10, which weren't even requirements. What the heck? My ruler is no good. I need new ruler. Oh. I have no idea what's going to be on the quiz. Absolutely no idea. I mean, if I study the definitions, I'm almost guaranteed of 50%, because usually 50% of the questions are definition questions. Although, I don't know about last time. I feel like last time there was like 2 out of 3 were definition questions. I don't know. And, okay, the least I can do is just read through this whole thing at least one time and then study the definitions, and then if I have time afterwards, try to figure out any other thing to study. Man. Cookies. I'm running out of time. Let's see, how much time? Like, I don't know how long it'll take me to pack everything. Not good. Not good. Not good. Oh, this is good. Now every edge is oriented. I'm a stupid moronic idiot. I forgot how to do an OLL. It was just because I was trying to cancel into it and then I got confused. Stop. I really want to eat cookie dough right now. That was fun. Oh, that's it. Dang it. determining whether to make reference to a component auditor in the auditor's report on the group financial statements, having gained an understanding of each component auditor. The other engagement partner should decide whether to make reference to a component auditor in the auditor's report on the group financial statements. Reference to the audit of a component auditor in the auditor's report on the group financial statements should not be made unless the group engagement partner has determined that the component auditor has performed an audit of the financial statements of the component in accordance with the relevant requirements of gas. That was funny. The component auditor has issued an auditor's report that is not restricted as to use. If the component's financial statements are prepared using a different financial reporting framework from that used for the group financial statements, reference to the audit of a component auditor in the auditor's report on the group financial statements should not be made unless I somehow have a feeling that I don't need to know this. When the group engagement partner decides to make reference in the auditor's report on the group financial statements to the audit of the component auditor, the group engagement team should obtain sufficient appropriate audit evidence with regard to such components by performing the following procedures. The procedures required by this section, except for those required by paragraphs 51 to 65. Reading the component's financial statements and the component auditor's report thereon to identify significant findings and issues, and when considered necessary, communicating with the component auditor in this regard, making reference to in the auditor's report. When the group engagement partner decides to make reference to the audit of a component auditor in the auditor's report on the group financial statements, the report on the group financial statements. I feel like eating a snack. This is going to be wasting time. It's going to be wasting. Can somebody read it to me while I eat the snack? No. I have no friends. That was fun. I'm not going to allow you to hear me eating a snack, so that was funny. 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 I really don't have time. Like, all I have time to do is just finish reading this and then study the definitions, and then we're good. We're done. Like, great. Great. That's gosh. Oh. Stop. The group engagement team should communicate the following matters with those charged with the governance of the group in addition to those required by the section: an overview of the type of work to be performed on the financial information of the components, including the basis for the decision to make reference to the audit of the component auditor in the auditor's report on the group financial statements, an overview of the nature of the group engagement team's planned involvement in the work to be performed by component auditors on the financial statement of financial information of significant components, instances in which the group engagement team's evaluation of the work of a component auditor gave rise to a concern about the quality of that auditor's work, any limitations on the group audit, for example, when the group engagement team's access to information may have been restricted, fraud or suspected fraud, including group management, component management, employees who have significant roles in group-wide controls, or others in which a material statement of the group financial statements has or may have resulted from fraud. Documentation: the group engagement team should include in the audit documentation the following: an analysis of components indicating those that are significant and the type of work performed on the financial information of the components. Those components for which reference to the reports of component auditors is made in the auditor's report on the group financial statements. Written communications between the group engagement team and the component auditors about the group engagement team's requirements for those components for which reference is made in the auditor's report. On the group financial statements, the audit of a component auditor, the financial statements of the component in the report of the component auditor thereon. When the component auditor's report on the component's financial statements does not state that the audit of the component's financial statements was performed in accordance with the GAAP or the standards promulgated by the PCAOB, the basis for the group engagement partner's determination that the audit performed by the component auditor met the relevant requirements of GAAP requirements. Applying the auditor of the group financial statements is assuming responsibility for the work of a component auditor. Additional requirements applicable when assuming responsibility for the work of a component auditor: materiality, And to decide individually for each component to either assume responsibility for and thus be required to be involved in the work of a component auditor insofar as that work relates to the expression of an opinion on the group financial statements, or not assume responsibility for and accordingly make reference to the audit of a component auditor in the auditor's report on the group financial statement. I am going to go straight to definitions. We are going to kill myself. We and I guess I'm going to. That was for me. Oh. Stop. 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 Stops. Stop. 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 This better freaking actually copy and paste it. Better freaking work, you stupid. Come on. Why is it like this? Why? Why? I don't have time to fix it anyways. Stupid. Stupid. Oof, oof, oof. Oof, 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 oof. Oof. Group engagement partner. Stop, 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 stop. Hmm. Hmm. How much of this can fit on a page? How much? Stop, 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 stop. Stop. Stop, 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 stop. Stop. Stop, 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 stop. This was funny, 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 this was funny.